Today we explore 8 key factors confirming that silver has entered a bull market. So let's dive on in. Now, this channel provides global macro insights and champions the notion of sound money, so do consider subscribing. A bull market is of course characterized by a greater proportion of investors buying rather than selling. Consequently, we see rising prices. That's just what we've seen in the silver market in recent months. After the March liquidity crash, silver has maintained this upward trend line. More recently, the move has been explosive. Our first confirmation of silver's bull market is the breakout through the long-term resistance of $21, which goes back to 2008. This is a level above which it hasn't seen since 2014. In addition, the golden cross of longer-term exponential moving averages has taken place between the 50 and 200 day period, suggesting a longer-term breakout move. Secondly, the gold silver ratio, which hit all-time highs earlier this year, confirms that silver has broken down through resistance at around 83 ounces of silver to 1 ounce of gold. Moreover, it's broken through the rising trend we have seen in the ratio since 2011. We now enter this heavily contested area, which could see silver hit support at 83 before going lower once again, something we've discussed previously on this channel. Third, we can see here the Dow Silver Ratio, which helps us understand the Dow Jones Stock Index against the price of silver. A lower ratio shows that it takes less ounces of silver to buy the Dow Jones. We saw this ratio top in the same manner in 2001. Similarly, we reached a further top in the fall of 2018. And ever since, that ratio has plummeted from about 1,850 ounces to around 1,050 ounces today. Interestingly, the first pronounced move of the candle here is of a similar percentage, around 20 to 24%. Fourth, we've seen the breakout of a number of miners, whether it's Pan American Silver Corporation and its breakout, as we can see here, or Fresnillo in this chart. We can see that the much improved prospects of higher revenue per ounce is now starting to be reflected within the stocks of those firms that have a high proportion of silver, which offers them additional leverage to any gold mining activities. Fifth, we've seen gold at all-time highs, and where gold leads, silver follows, usually further and faster. Indeed, this chart shows us the percentage nominal gains attained over the last 20 years. Gold clearly leads the breakout, and then silver catches up fast. And if we zoom in to consider the 5-year period, we can clearly see gold really leading the charge from the summer of 2018, but silver's move has been absolutely explosive over recent months. Sixth, when it comes down to the demand and supply factors for silver, the picture appears strongly positive over the medium to longer term. While silver production was hampered by shutdowns in Q2, longer-term silver production has remained largely stagnant, as we can see in this table from the Silver Institute. Moreover, the global recovery touted by our central planners is promised to be a green reset and recovery. The demand for solar and electric vehicles appears enormously price supportive for silver. Seventh, M2 money supply has gone into overdrive. The Fed's balance sheet has already hit $7 trillion, and there are additional demands for more stimulus to keep the stock markets at such dizzy highs. Moreover, Jerome Powell's Jackson Hole statement this week shifted the Fed's monetary policy approach towards average inflation targeting. Essentially, this will mean that interest rates will not be raised until inflation is well above 2%. Other central banks will follow suit, and this places a heavy blow upon the poorest in society who may already have lost their jobs. As David Rosenberg pointed out, Powell stated, inflation that is persistently too low can pose serious risks to the economy. How is price stability, which the Fed pursued with zeal for decades and is a source of real purchasing power for the consumer, seen as a serious risk, except for heavily indebted zombies? That leads us on to our eighth and final point, and that is that fiscal deficits and national debts continue to soar globally. Again, this is enormously price supportive. While many nations may be enjoying the impact of such fiscal stimulus right now, such rapid increases in debt are highly unsustainable, and a day of reckoning is fast approaching. For now, real treasury rates remain negative, and this offers additional support for silver's price. Furthermore, countries like the UK are widely adopting MMT, and this outright currency debasement is enormously price supportive for silver. But as we have seen in previous videos, even bull markets face pullbacks, and these are certain to occur given the sheer scale of paper contracts for the metal and the fundamental macro weaknesses. But for those that are prepared, they offer the chance to back the truck up, because I cannot help but fear that none of us quite own enough of a metal which has perhaps its very brightest days ahead. Are there any other factors that you feel I should have included here? Do let me know in the comments. I do hope this has been a useful exploration into what we have seen so far in an explosive few months in the silver market. Do consider subscribing, and I look forward to seeing you next time. Bye bye.